Hi, this is Brent from TradeGuild.blogspot.com, and it's the 22nd of November 2006. And last night I was talking about a stop system that I use. It's basically a trend channel or a volatility channel. And I included my emails for anybody who had questions about it. And I got a lot of emails today. So I'm going to just go ahead and put up a video so you can see exactly what it is. And I'll try to answer those emails as well. But the idea here is basically to take emotion out of the trade. And it depends on what kind of trader you are. This is not a scalping type of a system. This is for, trends that are, months more or less, not so much years, sometimes years, but more or less 2, 3 months. And for volatile stocks, I think it works really well. So anyway, it's to take emotion out of the trade because there's a lot of emotions that come into play when you have a lot of money on the line, or you're making a lot of money, or you're losing a lot of money. So this just helps to take those emotions out for me anyway. So basically what it is, and I'm going to show you here in a minute, here's a STC, and I just use mostly all the stocks that I just put in the prior video so you could see that I'm not, data fitting it, more or less. I'm showing you the same stocks you just saw in the last video for the most part. So here's STC, and here's the trend channel that I use. It's in blue. In the dashed red line is a volume weighted average price for a 10-day period. So the way this trend channel works, let me zoom in, is it's based on volatility of the last 11 trading days. So volatility meaning the range that the stock traded in that day from high to low. And then it multiplies that volatility by a certain width, and that's something you can choose if you want to mess around with it. And it creates this channel around it. So in an uptrend, the bottom line, the highest point of the bottom blue line is your stop. So on this day, your stop would be right here. On this day, your stop would be right here. Today, your stop is right here. And you have to fit it a little bit for individual stocks volatility. Like ETFs will not fit in this trend channel. You have to use a 2-day. So what I do, instead of going and readjusting all the parameters and everything, I just switch to a 2-day chart. And look how it widens out. So if you're a longer term investor too, like a 2-day would not be a bad idea if you don't mind sitting through a little bit of sideways movement and stuff. So if we're looking at STC, it works with downtrends as well. I'm going to just back up a little bit to this downtrend here in STC. Oh, too far. Way too far. Okay. So here we go. Let's take it from about April over here after we had this little sideways consolidation in April. At this point, what's going to happen is the top line of this trend channel is going to be your stop. So up here, so if price closes, and this is always on the close, it's not on intraday penetrations. A close above this level, 45, would be a stop. So let's see what happens here. Okay, so we're in somewhere around $46 or whatever, and here's the stop right there at 41. On this day, it closes above that. Now you can get back in short. You decide where. Maybe you want to get back in on a penetration of this low over here. So let's see what would happen there. I haven't even looked at this. I just saw that this is a one that worked on the downside. Okay, so here we go. We're going to get a penetration of the low here. It's going sideways. So, we got stopped out over here, but look, you saved a month of going sideways for, well, you lost a couple bucks there, but still a month of going sideways. We have a penetration below this level, really right in here, right there, definitely. So now your stop is right up here. So it just goes on down, goes on down. There you go, you're stopped out right there. The thing with this is you're not always going to catch the bottom of a short. You're not going to catch the top of a long ever, and that's the price you pay for riding trends. The idea is to catch the meat in the middle and leave the bottom 10% and the top 10%, which have increased volatility. Leave those for somebody else. So let's take a look at STC now. Let's say we bought on a breakout of this level. Say we bought over here, and it's going sideways here. So in sideways motion, this is useless. This trend channel is absolutely useless. Like MACD would be useless in sideways. So it's really constructed to take you out of these situations as well. So you need a trending situation. This is not a trending situation at this point. You have to draw your own conclusions, make an arbitrary stop. I would say below this level for my preferences. And once we get trending, let's see a breakout over here. At this point, we should be trending. You see the turn up in the channel here? Now this lower line becomes your stop, and there we go. There's been no penetration of that on the close, so that looks pretty good. Here's Alcoa, and I think what I want to show you in Alcoa, let's see what a 2-day looks like on Alcoa. Okay, nothing. Okay, back to the 1-day. So in Alcoa, it is trending now. It is broken out, so it's enough to get this channel moving up. It's started to move up here. Now, at this point, I would have my stop up here. I wouldn't go with the trend channel because this is just too far. As this starts catching up, and this will pull back a little bit, and this will catch up, you should be fine in Alcoa with this trend channel. Here's Rambus. Let me scoot back in Rambus to last year. I'm going to show you what I did with this channel. Let's see, what year are we in here? I'm getting lost. Okay, October of 2005 is what I'm looking for. Okay, so I bought Rambus on the breakout over here. I think I bought it on this day. So here's my stop at the lower line of that trend channel. Up, up, and away. Rambus had a great move added to it on these pullbacks. Look how this worked. This is beautiful. This is how this trend channel is supposed to work. We had a pullback, a consolidation of almost 3 weeks over here. And not one time did it penetrate this trend channel on the close. It came close on this day, but it didn't penetrate it on the close. So all this time, you'd still be in this position in Rambus. And I was adding to it there, and we got another brilliant move to the upside. And look how, you see how quickly it catches up? Here it is right here, 2750. Boom, it catches right up there because it's going according to the volatility of each day is affecting it. So we're getting pretty close to a stop right there. Penetration of that, boom, we're stopped out at 31.12. I was in at, I don't know, 12 or 14, something like that. We get some down movement. Rambus went on to make new highs, but you sat out a month of sideways movement, almost 2 months of sideways movement. It went up, made a little bit more, and fell apart. And that's one of the things that happens. Sometimes you'll get a little bit more upside than the place you got stopped out. But generally, they're over after the first stop out. Like I said, you might have a little bit more upside, but then you get this real violent move down. Here's MEMY. We were talking about this in October, but look, if we had bought it back here in September, this channel just held up. We had a test of it there. We're still holding up right here. So the highest point of the trend channel is our stop over here. So around, I guess, 225 or so. Okay, let's take a look at DNE. You can see DNE has not been stopped out. Got close this day. So we're in an uptrend here. There's a nice size correction here, a nice size pullback. But the trend channel, you see how it widens out for this correction? It's according to the stock's volatility on each day. So that's worked out really good. And take a look at the next one, which is HXL. You can see this has had a nice move. Didn't get stopped. So here's your stop up here at 1650. And you just let that sucker run. There's no emotion in it. You don't say, okay, this was a big day, should I take my profits here? Well, no, you don't, because you didn't get stopped out. Well, I got some spinning tops here, should I take my profits? No, you didn't, because you didn't get stopped out. So you just let those run. We're getting pretty close to the end of this video. I'm going to go ahead and throw up the formula real quick, and you can pause, and you can copy it for yourself. So basically, here we are. I have visible checked. I have simple checked over here. It's a 10-day wick multiplier with a 1-day smoothing average. Average close 10. And over here, your high minus your low for 10 days divided by 11. I'm out of time. I hope you enjoyed it. You can email me if you have any questions. Thanks for watching.